Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's November 3rd. This will be our chart lesson for the day, and another down day today. You can see we did push on through the EMA there, or the midline and the EMA, and closed lower here. We didn't close quite on the low. I don't know if that means anything or not, because really we sold off and just kind of went sideways today. We did close and break just below the sideways action right before the close. Prices dropped a little bit more. I think we're going lower here. I mean, we could bounce, but it looks like we've gone a long way to really come back and test this high again. Not saying it couldn't happen, but just looking at this, I would think we're going to continue to go lower. Um, Zoom in here a little better, a little more, and look at this a little closer. But yeah, it looks like to me we're probably going to push on lower here. We're not. I mean, we're getting towards oversold or oversold territory, but we're not there yet. And in a bear market, you're going to tend to overshoot that side versus you notice how we kind of close right at the brown here. I mean, basically right on it before we turn down. So these are the envelope bands. And notice how we've been getting oversold down here way below them in the past. So this has tended to be strong support here. And so if we test that and it holds again, we could go higher. My guess is we're probably going to test that and push lower before it's over, but we'll just have to see. It's a little early to know just yet. We'll see how this continues to act on the way down here, and we'll get a better idea as we get closer to it if we trade down there. So, but anyway, let's flip over to our 2000 tick intraday chart, and we'll go through the trades, and we'll wrap this week up. This is Thursday, so no chart lessons on Fridays. This will wrap our week up. But let's flip over there and take a look. And here's what it looks like. You can see we had this two-tiered blue channel. We had a break, couple of legs to a new low, and then we had this spiking channel up with the break and a new high, and then we just kind of chop sideways the rest of the day. And once again, this is one of those channel or ranges where there's no consistent turns really on the lows or the highs. So really all you can do is trade these trends within it. Notice that, let me show you this blue line here that I had this on this morning and talked about prices probably trying to fill that gap before they went lower. But notice that's the low from yesterday. And when we open this morning at the regular session, that's where this yellow line pops on, right where it turns white. And so even though there's trading in here on this chart, if you went to a pure daily chart for that follows the New York Stock Exchange time, so forth, there's a gap between here and here. And usually prices will try and fill that gap. And you notice we got close here, didn't quite. When we came up here, we got real close, didn't quite make it, and then we came back and surpassed it right here. And then finally prices sold off again. And so my guess this morning was we were going to trade higher and fill that gap, and that's exactly what happened. A little convoluted that we sold off again before going up, but we just ended up kind of working sideways. And a lot of times, once you fill this gap, if prices continue higher, if there's the close is higher from the previous day, like up here, that will sometimes be a secondary target. And sometimes reversals just keep going. But generally, these are two real easy targets to look for and expect prices to try to go to before they sell off again if it's in a downtrend, or if you're in an uptrend, it'll pull back to test those areas. So that's an important thing that you keep in your put that feather in your cap and remember it, because it comes in handy of trying to figure out why, what prices are doing, if they're really going to bounce here or not. And they may try to go back and fill this, and the selling's just too strong and they sell off. And usually when that happens, say if we had have sold off from here or here, a lot of times we'll make another measured leg down just like the first one. And so if it trades lower and keeps going, look for a possible measured leg down. So that's generally how that works. So just keep that in the back of your mind for future reference, and use it when you get the chance. But let's zoom in here and go through the trades. Let's wrap this week up. 7 o'clock came. right over here, just as we're kind of work. Actually, I think it was right as we worked in here, hit 7 o'clock, and then it bounces, and then right here at the midline, tries to go higher once, twice. So if it breaks lower, that's a failure, and you can see how they trapped them. Boom! Look how quick that drops down. That's what we want to see on a failure. This is not really a reversal pattern. This is just a continuation pattern, but it's a failed second entry long that leads to a trap. And again, this is an advanced trade, so if you're new to this, don't worry too much about these trades because you'll just screw yourself up trying to take them. We drop on down. We do get another second entry here, but that's that inside bar. I'd skip that trade. Maybe you take that lower high. I didn't mark it. It turns up there and gives you a lower high. I didn't mark that one because it was an engulfing bar, but maybe you take that. I don't know if you take it on the engulfing bar with that being a doji. Um, but if you got room, if it breaks lower here and you got room down here, maybe you take that trade. It works no matter what, but you don't know that in advance, so you got to kind of go with the rules and make sure you got room to scalp out. And of course, now we've bounced off this low end a few times, and it finally musters up some strength to get back to the other side. That is really tempting right there. And if you took that, I probably, I wanted to mark that green in real time. I wanted, I like that trade. I'll be honest with you. It's a second entry right at the key entry point, but that channel is still there, and sometimes that will burn you. So usually it's better to wait for a lower high or the break and see if you get a higher low or a new high on the retest and then a setup. But if you took that, I wouldn't argue too much with you. If you're going to be aggressive, that's the kind you want to be aggressive with. I mean, it's 11 ticks. It's not very big bar. It's a second entry right off of proven. Well, that really just sets the key entry point right there. So you can't really say it's proven until that. And then it doesn't hold very long after that. So it's just really late. I mean, this was a really strong sell-off, so that's another reason to like that trade. Look how long it took us to get back to the trend line. I mean, this was at 3 in the morning or so, and here it is 8, 5, 5 hours later, 5.5 hours almost before we can even get back to the trend line. That's a bearish market. So if you took that, I wouldn't fault you. And of course, we bounce here and we get a close outside. You don't want to go long here. This was another one that was really tempting, but if you didn't go short right there, and I don't like it because of the way it stacks up right there, and you see it tries to push up again. It actually goes higher 3 times, but it's right into the EMA with lots of stem there, so that doesn't like a good place to enter. Even though it takes off, you just can't take that trade. We've moved way too far for that to be a lower high. But notice how we come back and we try to go higher again. We turn down and we come back yet again. So there's your triple test. Look how bearish that bar is. That's where you go short. And really technically the second entry is right here when it turned higher and went down. But you could still look at that on a bigger picture as a second entry. And look at it go. That's a nice trade. And this is the 9 o'clock high volatility news item. So lately you're better off to, even on something like this, normally these are non-factors. This didn't last very long, but still you can see it. Lately, any high volatility news that's red has been a problem almost lately. So pay attention to them, at least for right now, even if they're usually a non-issue, because you can see this one did. And I'd be on these FOMC, I'd be an hour, but on these you can 15 or 20 minutes, 10 minutes tops. So I mean, you could still continue to manage this trade right into 9 o'clock, but right before 9 o'clock I would exit, because you see it could have taken it all back in just a blink before it went lower, and then next thing you know we're going the other way. So just be flat before it comes out. If you're like, assume you took this trade right here and you got a nice runner going, well, you don't want to give up all these profits just to get out, to be out of the market. Just be out before 9 o'clock, and don't enter any new trades, because you want to be flat going into that news item. And you don't want to enter one in here because look how it gets. Sometimes it'll do like this and just go straight sideways, and so you just get stuck in a trade, and the next thing you know, you're stopped out when the news hits. So you can't take any new trades early. It wouldn't matter if you were stuck in this right here going sideways if you entered way up here. So just be out before the news. Hopefully that makes sense to you. But anyway, we make a new low, and then all of a sudden we spike up and go in this channel, and we're heading higher. And my first thought is, hey, we're going to try to fill that gap. Just the first entry there, and that really kind of confirms the trend line maybe. We come back here again. It's by the count, that's a second entry, but the signal bar is no good, and I would just look at that as a first entry. So your second entry is right here, and again, your signal bar not very good, and then you get a reversal or a failure here, which this is somewhat of a reversal, and I like going long there, and you can see how it rockets up. It trapped everybody short, and boom, off it goes. That's a great setup. Gets you into an instant runner most likely, and that's the kind of trade you like to take. But we run up the high side, then turns down again. Again by the count, there's a second entry there, but no signal bar. But to me, this looks like one leg that first entry, so I count that as a second entry. This is just a congestion up here with the first leg down, and so there's a second entry right there. A lot of times I'd be a little bit leery of this. I'd want it to be back to that trend line, but we just came off the low and we haven't got to the high. So with this being a second entry and this being a fairly strong move up through here, knowing what we're probably trying to go higher here, I like that entry. You could even look at this as a failure, but again, it was an engulfing bar, and then by the time it closes, it's up here into all that resistance, and I just think you have to skip that one. And we finally run all the way up to the upper side, and it turns down. And this time you get a break outside. There's a second entry again here, but again, it's an engulfing bar, and you see it would have got you stopped out. So just wait until you get something better going up. And I don't really see anything. There's a failed second entry short here, but it doesn't get back to the EMA. It doesn't really look like a reversal pattern that's going back with a trend, or a failure that's going back with a trend, or whatever. And just not much to get into that. And then of course it gets up here and it starts chopping sideways, and you get a quick triple test with that big bearish bar, plenty of room back to the EMA. That's the trade to take. I mean, that's just begging you to take that and look at it. You get an easy runner here. And notice that little break higher in there. That's a little too far to be a lower high. It's a breakout pullback short, of course, but I just don't think you want to take that there. But we see that. I see that several times today, so it ends up being a repeat pattern. I don't think I marked any of them because watching them in real time, I just didn't like them. But you got to pay attention to a repeat pattern, and actually pay attention to this one because we'll see it a couple more times today. Another second entry short right here, but no signal bar. There's that lower high again. And then we're rocketing up. Again, I don't see anything here. There's a second entry here, but signal bar is no good. And then we're rocketing down. There's that setup once again. I mean, if you saw this and started taking these, I wouldn't blame you. Every one of them work, I think. So, there's one you might take. And then we drop down, break outside, new low. Unfortunately, this is just a double test, and it's right at the EMA. So I'm thinking wait on a reversal. And it doesn't look like you're going to get one. And sure enough, it comes back, touches it. So if it breaks higher there, notice how it rockets up. Because everybody got short because we've been turning down there at that resistance every time. And that turns out to be another nice trade. Runs on up, gets a close outside, and here's that pattern. Try to go higher once, twice, three times. This one's a little more of a congestion type area. I didn't color that for some reason. But there's still plenty of room to get out. It's a triple test. It's the same kind of deal, really. And you make a new low, and then it's going higher. But this is really the retest of this green one. And again, I don't see any chance to really enter that. You didn't quite get that triple test here. But guess what? You get it right down here. Drops on down. Notice you try to go up once, twice, 3 times, right at the key entry point, big bearish bar. I like going short there. You can see it's a nice, quick, easy move. And then there it is again. 1, 2, 3, right at the key entry point. Boom. Then you get a lower high here. Then you get a failure here. New high, first entry, second entry, real small bar, 5 ticks, very low risk, and boom, look at the bottom fall out of it. And then there's another one of those lower highs off of it. So technically you might have taken that one if you realize that repeat pattern we've been seeing over and over. And then notice the new low, first entry, second entry right at the EMA key entry point. We do already have a little bit of a close outside and a new low, but there's a good chance we're coming all the way down to here, and usually you'll make 2 legs. So with that being a perfect second entry with such a nice signal bar, I like that trade. And it does bounce early and go higher. And again, I don't see anything. I mean, this is a possibility. If that was just a real strong bullish bar, I mean, it is pretty bullish because it closes almost on the top, but it's doji looking, and that kind of scares me. But we're a little ways away from the EMA, so it's another one. If you want to be a little aggressive, that's one you might take. Runs up, gets a close outside, new high, and then we're running down, and then there's that setup again. This one's a little congested. I'd probably skip that one, but there's that repeat pattern again. We saw that all. I just saw it all day today. This one, we get a close outside, new low, and then you're running up, close outside, new high. And notice too here, you got this, when you come up, you try to go short once, twice. That's a failure. Although this looks really sideways, and we're working back and forth above and below the EMA. So, and that looks a little congested. So that's one I would not take. And then we come up, we make the new high, then we're working down, we get a close outside, we make a new low, you're running up, close outside, new high. Here it is again, we're coming down, and technically the failure is here. If it would have broke, look, this was an engulfing bar, so I didn't like this just because we've been going sideways here. Same thing here, and you might say, okay, well there's that lower high with a bearish bar. But it's just we've been going too side. It would have worked, but it barely. So, and then next thing you know, we're working up. This setup was at 235. It's almost 6 minutes into 230. Sometimes if you get a good setup right into the, right at 231 or 232, maybe you take it. But I think 5 or 6 minutes. I mean, technically you could take that trade if you wanted. That's a triple test as well. And that's how I saw it today. Pretty good afternoon for a change. I mean, we don't really get that one trend there had 1, 2, 3, 4, 5 trades, and they were all fairly easy trades, except for maybe the reversals, which newer people should stay away from. But there were still multiple trades there on that one move, and you just don't see that much in the afternoons. That was some really nice price action there. So it was not a bad day really overall, considering we spent more than half of it going sideways. Unfortunately, sometimes you get these quick reversals that you just don't get a setup on or a chance to enter them. And it's unfortunate, but if you want to be successful at this, you have to learn to be patient, and you have to learn to watch some trades that really look exciting go without you because they don't follow the rules and they don't set up properly. And sometimes some of those will work, and what usually happens is you'll be wanting to take that trade, itching to take it, and you'll see it and it'll work beautifully, and you'll say, I knew I should have taken that trade. And then it comes along again and you take it and it fails, and it comes along another time and you take it and it fails, because most of the time it will fail, but sometimes it'll work. So Just because you get a great move and a trade that works doesn't mean that you read the chart right and that it was a good setup. So always study your trades, including your winners, because sometimes we get lucky. And you don't want to be reinforcing luck. You want to be reinforcing a proper read and good chart reading based on good chart reading skills and based on following the rules. That's the difference between a winner and a break even or a loser. And generally, there's a lot of people that can actually get to break even just because they've learned the strategy, but they can't get their discipline down to get past that break even. So work on that discipline. If just because you see a trade and you're itching to take it, and you know it doesn't quite follow the rules, but it's close, and you take it and it works, all you're doing is reinforcing bad habits. And you don't want to do that, not in this business. You got to be almost perfect. Look, if you got $1 million sitting in the bank and you're trading 4 or 5 contracts, you can afford to be wrong a few $100s. But you got to have deep, deep pockets. And most people, even if you do have deep pockets, that's not wise trading because you'll blow an account pretty quick. So really, to be a good, to really be a great or good day trader, we have to be almost perfect on our entries. Our timing has to be impeccable. We can't be a few minutes early. We can't be a few minutes late because it's too costly. And we can't ride out being wrong. Even if we know it's eventually we're coming lower here, we can't ride out a big move like this. Because, I mean, if you take that move, that's a $2,300 move. And if you're trading 10 contracts, well, that's $20,000. And as small traders like us, you don't want to risk a $20,000 on a trade to make a few more thousand. So we can't ride those out. We have to get it perfect. And even if you'd enter down here and you're trying to ride that out, well, look where we closed. You'd have had to exit before the day was over. So even though we may go lower in the end, and you know that, you can't ride this correction out because you'd have got stopped out because your broker would take you out, and you would have lost. What am I looking for? You would have lost from here to wherever they took you out, probably around 3 o'clock, 3:30. I don't know what time they kick you out now. Maybe it's 4:45. So you'd have still lost $1,300 a contract, and you just can't afford to do that. So hopefully you understand why why your entries have to be perfect, and you can't take chances, and you got to be disciplined. That's the key to success. And that's where so many people struggle. But anyway, I'm going to wrap it up. Hope you had a great week. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next